Welcome everyone to Vested Interest. This is Shane. It is January 23rd. We are back for our Stock Pick of the Day series. Today we are going to take a look at AT&T out of the communications sector. Let's jump right in the video. This is going to be a quick one. And as I said, AT&T is out of the communications sector. At AT&T, our purpose is to create a connection to friends, family, work, commerce, education, health, entertainment, and more. To deliver on that purpose, we're driving our business forward with two key areas of focus: 5G and fiber. So basically phone lines, internet connections, cell phones, you name it. I don't know a lot of people that still have a hard line at their home or a home phone versus everyone walking around with cell phones. But that's what they do: communications, connecting people. So if you want to read the rest of this and if you want to know a little more about them, you can check them out at their investors at their home, at one of their home pages, investors.att.com. That's where I pulled this information from. It goes into a little bit more about the company there if you're interested. Now we are still talking about AT&T, ticker T, out of the communications sector. And the reason we are looking at them today, they were down 0.68%, so not down extremely an extreme amount here, but they did close out the day at $19.10. 52-week range as low as $14.46, as high as $21.53. Average volume 40.2 million. Today was 31.4. You can see it looks like actually they went up a little bit in the first part of the day, and then towards the end of the day really fell off. A little bit of a recovery there, maybe from the lows. It's like maybe high 18s, but again, closed the day out at $19.10. And the after hours looks like they're recovering slightly there. That's what you're seeing here. This is after regular trading. And if you wanted to trade in after hours, Webull does allow you to do that. I do have a Webull link down below. If you use that link to create a brokerage account, drop $100 or so in there or more, whatever you're going to invest in. You'll get some stocks. I'll get some stocks based on whatever their current promotion is. You don't have to use that, but it is a way to help the channel. And let's jump back into AT&T here. The market cap is $136.126 billion, a beta of 0.73, so that they are less volatile than the overall market, even though today's volatility was a little more than you typically see. PE ratio is low, 7.89. Earnings per share is $2.42 per share. Next earnings date is coming up in a couple of days, January 25th. For dividend is $1.11 paid out on the year, so divide by 4. They do pay out quarterly. We will see that quarterly payout here in a minute. And they have a very nice dividend yield at 5.77% currently. Obviously, if they were continue to pull back and you bought them cheaper, that dividend yield would be higher. Their ex-dividend date was January 9th, so you've missed that one. You would not get their next dividend. You would have to wait for the following. And their one-year target estimate, at least according to Yahoo Finance, where I pulled this information, I am not affiliated, just one of the sources I like to go to for information. They have a one-year target estimate of $20.54 for the share price. Now, another source that I like to go to is stockanalysis.com, and I always recommend more than one source for information so that you can verify that the information you are getting is correct. So again, make sure you're always looking at more than one source. You pick out what sources you like. There's plenty of them out there, Alpha, several others anyway. And according to the 39 stock analysts, they've had to take a look at this. They call it a consensus buy, though it is right there on the edge of a hold and buy, really. And they have a low estimate of $9.09. Now, be realistic, I don't think it's going to get that low, but you never know. It could. But that's their low estimate there. That would be a 52.41% decline from where it currently sits. They have an average estimate of $20.91. That would be a 9.48% increase in the stock price from where it currently sits. And if it happened to hit their high of $29.40 here, that would be a 53.93%. All the while you would be collecting that 5+% dividend yield if you were to buy them today. Now we will take a look at my position. I am long AT&T. I did buy them before their split last year, but I sold off the shares of Warner Brothers there whenever they did do that split. But I kept the AT&T shares and actually added to them after that split because they dropped down significantly. So my cost basis is $18.25 per share. I have 210.637 shares. I'm up 4.60%. I have $3,844 $44.11 into the position. It currently sits at $4,021.06. If I was to sell out of the position, I'm not interested in doing that. I'm going to sit here and collect the dividend. And it is a quarterly payer, like we said. Pretty decent payout ratio after the split, 57.8% payout ratio. Now here is the one that you're going to notice that I don't like. Based on this, when they did the stock split, they did drop their dividend. So they do have negative dividend growth currently. As you can see here, before the split, January 7th of last year, it was paying out 52 cents per share. It is currently paying out 27 cents per share, about 28 cents per share. It's 0.2775. Let's call it 27 cents per share there. So I am hoping for a dividend raise here in this quarter so that they would start back up their dividend growth again. We will see if that plays out. I am comfortable holding them. My payout ratio, or I'm sorry, my dividend yield currently is above 6%. So I'm fine with a 6% yield on this one, even if it took them a while to start growing that dividend again. Like I said, I'm a little bit below their cost basis, and if they drop back below $18, I may add a little bit more. I do like that higher dividend yield they offer, so I am going to continue to hold them and hope that the dividend increases continue or start back up here in the future. So that would be the only negative I see with this company, and would be something to keep an eye on for us dividend growth investors. Obviously, we want to see this growing over time, but I'm not as concerned because there is a good reason for the company to do this. They spun off Warner Brothers and took a lot of the debt that they did have and shifted it over to Warner Brothers, so they are not as indebted currently as they were previously, which dropped their payout ratio significantly. They were, above 100% at one point whenever I was looking at them for a payout ratio. So not a good sign, but hopefully this spinoff will be a positive catalyst for them, and they will again increase and start increasing those dividends going into the future. Well, these are quick hitters. We are trying to find value in the market. AT&T, let me know what you think down in the comments. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell down below. Most importantly, subscribe to the channel. Hit that subscribe button. It doesn't cost you a thing, and it really does help out a small YouTube channel like me grow. Dropping a comment down below does as well. So let me know what you think of AT&T. I own Verizon as well, so maybe you are more on the Verizon side. I don't think T-Mobile pays a dividend. I know a lot of people like them for their growth. Personally, I like I said, Verizon and AT&T for the dividend out there. But let me know what you think. Is it one you're holding? I think there's a love-hate relationship with AT&T. Some people were pretty upset whenever they did the spinoff and dropped that dividend and kicked them to the curb. I was not one of those. I continue to hold and would, like I said, if it drops below my cost basis, would look at adding some more. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. Keep your eye out. This is earnings season. So as these companies report earnings, the market's going to shoot up, might shoot down if we get some bad earnings. So keep your eye out, keep your powder dry, keep some cash on the side. And whenever you see a price you like, don't be afraid to jump in, especially on the red days. That's whenever you want to buy. When things go down, that's whenever you want to buy. It will increase your yield and increase your potential future returns. All right, we'll see you in the next one. Have a great week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and manage money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.